This is USD Weekly Analysis. Now, on the weekly chart, we see a liquidity wipe where price moved above that buy side liquidity and moved back down to the weekly order block. Now, it's reacting off of the weekly order block, moving up to that imbalance. So, price has to go and fill that imbalance, and then we see where it heads there, probably down. But so on the weekly chart, we see that price is shooting up. On the daily order block, we see price is in a big daily order block. And when we examine this big daily order block, let's pull out our Fibonacci retracement. We see that price hit exactly the 50% of the premium and discount zone. So it hit the equilibrium of the premium and discount and then decided to start shooting up. So daily is also indicating that price is shooting up, and weekly is indicating the same thing. Now, right now, currently price is reacting off of a daily bearish order block. So it's shooting down from that daily bearish order block, and we can notice the shift in market structure and the break of structure. So price was headed down. It was in a downward trend, but now it seems like it's reversing. So it's likely going to shoot from that bearish down to the bullish order block and then continue its reversal. I think you guys get the illustration, even though I'm fumbling. It's not scripted, this. So yeah. On the 4-hour, we see a clear market structure. We can see during the downward movement, price was breaking structure. Like it was in a downtrend, so it was breaking many lows. So there's a lot of break of structure on the lows, break of structure, and then that's our last break of structure before the shift in market structure. Now you get why we call it an SMS, because that low hasn't been broken, but it attempted, and then the market structure now has been shifted. So there's a shift in market structure, and before it attempted, it broke structure on a high, which when that happens in a downtrend, it shows that price is now headed for a reversal, or is now trying to reverse. So after it broke those structures above there, it headed down to the 4-hour mitigation block, or the 4-hour order block. You can see price poked about 3 times there. It attempted to keep on heading down, but it couldn't. It even hit the 4-hour order block and went up to wipe liquidity, or to break structure above there, because it did a slight stop height and then moved back down, but it continued up to break structure and hit that gray zone, which is the daily order block. So now what we're now looking for is let's look at the range in which the price is in. It's in between this low, which contains the sell side liquidity, and that high, which contains the buy side liquidity. So price can either reach for the buy side liquidity or for the sell side liquidity. Now, what's below the sell side liquidity or the buy side liquidity? We have to look what's below and what's above, like the interest point. What's below the sell side liquidity is a 4-hour mitigation block. So if price decides to reach for that sell side liquidity or that low, it's going to be met with the 4-hour mitigation block or the daily order block that's in line with the 4-hour order block, the daily bullish order blocks. And above the buy side liquidity is a daily bearish order block. So if price decides to shoot up, it will be met with a daily bearish order block, and then it will shoot down from there, or if price decides to reach for the sell side liquidity, it will reach the bullish daily order block and then it will shoot up. So any where price goes, we know what it's going to hinder or what's it's going to react off of. So as of now, because price is reacting off of a daily order block, that gray zone, we think price is shooting down. So we'll start looking at the market from that perspective, that as of now, currently price has to shoot down. Now let's look at the day of the week, the days of the week. Now if you look at the previous week, now I want you to take a close look at the previous week. I just want you to look at the high of the week and the low of the week. So when this week opened, what did it do? It's very clear it reached for the high of our previous week. It broke structure of the high of the previous week. Let me just mark it out so that you guys can see. So it broke structure, high of the week wiped. So it broke structure of the previous week and it hit the daily, that gray zone, the daily order block. So this is a big indication that it's now going to shoot down, reaching for the sell side liquidity down there. So the only interest point that can hinder it from shooting down is the 4-hour mitigation block and the 4-hour order block that are in line. So if price tries or attempts to move down, it will hit that 4-hour order block or mitigation block, and then it can continue shooting up, or it will come back to another interest point, whether it's a 1-hour order block there or a 30 minutes order block, and then it will continue into falling to that sell side liquidity below that low. Remember, that low was created on Monday, so the likelihood of price reaching for it, it's high. So this, it's not, price may not do exactly as I've predicted here, but this is what I think it's going to do if it's reaching for the sell side liquidity, or it might just continue on shooting up and then it will hit that daily. But this is my prediction. It goes down the 4-hour order block, back up, and then shoot down to the sell side liquidity, and then it will continue moving up as of the Euro USD reversal, because it's reversing. Thank you. This is the Euro USD analysis for the week.